The first stock that I have is Edwards Life Sciences. The ticker is EW. The market cap is $46 billion. That's how much, quote unquote, the stock is worth today, like the entire company. I'm actually thinking about that. I probably should put the stock price on here, but I did not. But let me get that right quick. But in the meantime, this is Edwards Life Sciences. They're in the medical technology industry, and they have a product that I'm not going to try to pronounce because I always mess it up. But essentially, what they produce are these specific type of heart valves. So for people who get older, and they have like cardiovascular issues, cardiovascular disease, there's certain issues around their heart, getting blood in and out of their heart. So because of that, a lot of people aren't in the medical condition, especially when they're older, to actually have open heart surgery. Like it's just too strenuous on their body, too strenuous on their system. So Edwards Life Sciences created a remedy for that, that involves minimally invasive heart surgery, so it doesn't involve open heart, and it's a type of technology that helps blood flow, help pumping of the heart. So it's very useful. It's very helpful. It's also affordable relative to heart surgery too. So there's a cost benefit too. So the insurance payers like it, doctors like it because it's easy to understand. Patients like it because they're afraid to get like a full blown surgery. It benefits all around, right? In terms of a long term theme, this goes back to an aging population. We are living longer and longer every day, and there's a lot more senior citizens in the world today, and I think the number is like a little bit over 600 million senior citizens in the world, and that number is going to get to a billion over the next 10 to 15 years. So a lot to happen, right? A lot to happen, and unfortunately, not everybody's healthy. And this is specifically something that's going to happen not necessarily in the U.S. but outside the U.S. and maybe the more emerging countries in the world. Um, Also, just some quick fundamental news about them. They are growing sales over the past couple of years. They've grown sales 3 times faster and have 2.5 times a higher profit margin than the average company. So to put some context around that, the average public company in the S&P 500 is a profitable company, has about a 10% profit margin, net profit margin, as well as grows sales about 3 to 4%. So Edwards Life Sciences is 3 times that in terms of growing sales, and they have a 25% net profit margin. And they are a super safe company, no debt. Well, they have a little bit of debt, but they have a lot more cash in the bank than debt. So this is my first one. Any quick question on this one? Okay, no question. And by the way, the stock is actually kind of expensive. It's $219 a share. It's a lot. All right, let me make this snappy so I can get this one out the way. This one is more of a safer pick, um, called Analog Devices. And to be honest, there are some more innovative stocks out there than Analog Devices, but I also want to provide one that was a little bit safer. Um, this one, the ticker is ADI. The stock price is about $111 right now. The company's worth $41 billion right now, in the semiconductor space, and they produce analog products and data converters, which is like weird. You don't really know what that really means, but let's just say that they're a big play in the Internet of Things, on the commercial side. So some things that we see where like different devices are collecting data from us, right? So your smart TVs collecting data from you, Apple Series collecting data from you. If you have an Alexa or a Google Home, they collect data from you. Just hearing what you're talking about, and they put all the pieces together for the data and actually make something out of it. This is more on the consumer side that me and you can see, but Analog Devices is doing that exact same thing, but on the commercial side. And they're growing super fast, although this past year was a little bit rough. They're growing really fast. They also have a higher profit margin and also pay a dividend. For scared to go after the full innovation, this is a safer company to pick. that is all I have. So let me get out of screen saver mode. Okay. Hey, how you get out of screensaver mode? Oh, that's what I see. All right, I'm out. Okay, yeah. Those are the two I have.
That's dope. With the, I especially like the Edwards Life Sciences.
Yeah, Edwards Life Sciences is like my favorite stock. It's like one of my
Really?
favorites, especially in healthcare in particular. It's like one of my favorites.
Really, that's dope. I think that like if we hadn't touched on it, but eventually we also want to create an investment club, and everybody would be able to, place a stock. And I think we can have a basket of just innovative companies mixed with, like, your stable workhorses like Microsoft and Apple, and then we create like a mega fund in a way. That would be very interesting. I think Edward Life Science is something just
Yeah,
to
no,
grow something.
it's a pretty good one. It's a really great one.
My two stocks, I guess, since EJ did two, I'll do two. Two stocks I want to talk about. DocuSign. That's one of my first ones. I don't own it yet. It's so high. I missed it. I remember when the stock was like $70, and now it's $135, and I feel so terrible about it. But they are basically a software services company, and they help interact with, like, signing papers, signing documents. You almost don't need standard contracts, or with COVID-19, everyone needs stuff like that, and you can kind of do it from your house. If you need to sign a document for real estate, or sign a document, make a quick document with your friend, you loan them some money, you need to agree to pay something back, they do that. Business to business, they use that, from enterprise to business. So they help businesses draft documents, and they also have other software services they provide. So it's number one on my buy list right now. Eventually, I think it has potential to be a $400 stock in the next 2 to 3 years. Just if you look at the growth on their 5-year chart, I always look at the 5-year chart first. I was gonna try to post a picture, but it's not letting me in the chat. But their 5-year growth rate is 251%. So it's already more than doubled. Had you just gotten in, I think they just IPO'd like 2018. So
yeah, they're more recent.
Yeah. And also, one I'm really excited to talk about is DraftKings. DraftKings, man, I love DraftKings. They are a pure play on sports betting, and it's only going to get bigger in time. Everyone has not legalized it yet, and it has a lot of money. You can bet on, like, how many points somebody's going to score on a game, or what you think the actual score to the game will be, and you can get paid off of that. And it just drives home everybody's ability to, get that kick out of sports, and makes more sports more fun. And I believe that's going to be very impactful in the future. I actually have gotten in on this one. I have actually doubled my money, albeit that I didn't put enough. I didn't know to go that hard in on it, but I think it's going to at least $40 by the end of the year if it keeps on its current pace. So that's about another $11 gain. And percent wise, it's about another 40%. So that is my number one. Those two are my number one buys. If you want to touch on anything else on the list, EJ, you can. If everybody wants to, if anybody has any comments or concerns and want to talk about stock they have, not just make the show about us, that's fine too. Have y'all been buying these stocks since we started? Has anybody bought anything? That's more so what I'm curious to know.
Yeah, I've bought a few. different stocks. So I've had some before, but I haven't bought
Mhm.
the ones that you guys suggested last time. Let's see, hold on.
Yeah, I think it's kind of the same for me. I've had stocks kind of like at the beginning of the Corona,
Mhm.
which was, let me check. I got Dow. I got 4 shares of Dow, and then I got some Darden restaurants.
Mhm.
And Darden restaurants is basically like all of the major chains, like Joe's Crab Shack, Olive Garden, restaurants like that. They're all owned by the same guy, and they have a stock, Darden restaurant. And I caught that at the very low at $30, and takeout has been humongous. It's shot up to $75 right now. So I'm looking to ride that one all the way up.
Wow. Yeah, that was a good pick. That was great timing.
Yeah. But I think it's kind of interesting about DraftKings too. One of my boys was actually, we were having a conversation the other day, and he was saying, hey man, what if someone could bet on some, like an athlete's progression, or bet on how they think that they would do? Like it'd be like a player's stock market in a way.
Mhm.
So the fact that you mentioned DraftKings is literally that. Like you're betting on the game, you're betting on how many points that person could have, just their overall production. So that could definitely be something that'll boom, especially whenever the lift is over and all the players go back. DraftKings is gonna have to get innovative if they want to maximize.
I think DraftKings is going to see a surge in stock, just in the share price short term. The NBA is talking about coming back in June sometime. So I think there's so much pent up demand to gamble or to have some type of creative outlet to decompress that the stock price is just going to keep up its current trend. And like that $40 mark, that $35 mark is actually might be a little light. Like it came to 30 like before I could even imagine. I've been in the stock since like $13, $14. I started looking at it at $9. So I just
That was the
think
very low, man. You caught a steal.
I just think it's just one of those companies that it's not expensive. So I might as well, like, once I get it, just buy 100 shares, 200 shares, and just ride it. It's like something you can throw in your IRA or put a long-term option on. I know we haven't talked about options, but put it's what they call a leap. So like I could buy rights to the stock until like 2022, basically, and just bet that it goes higher. I say like another $10 or so. You know, I really feel like it could be like strength tends to beget strength, and I really feel like I wouldn't be surprised if DraftKings was $70 soon. You know, just like if you study how Beyond Meat just went bonkers, I think they're very similar.
Hey, Trevor, what was that stock that you had mentioned the other day? TPX something?
Oh, XRP.
Oh, yeah.
Basically, so XRP is like Ripple, which is blockchain technology. And I was just wondering if you guys ever know anything about that, because basically from the things I've heard is, or researched rather, is that it's going to basically put the banks into the blockchain game with the Bitcoin technology and all of that stuff, and make wire transfer monies like instantaneously rather than a couple of days. And that's at like 15 cents a share right now. And 2 years ago, it went from like 19 cents a share to like $3. It had a big spike. Now it's back down to like 19 cents. So have you heard of like Ripple or XRP?
I'm familiar with blockchain and like some of the altcoins, but I think that's one of those I think it's one of those things like wait till they're profitable, wait till they got buzz, and then it's okay to ride the wave once you know, and just focus on like tech or more established entities. Like you could have a little bit in there and just hold it. Like it's only 10 cents, like you said. But for me, I want to see Visa partner with Ripple or buy them, or I want to see Visa or MasterCard buy, put a stake and buy like a lot of Bitcoin themselves or try to copy Bitcoin and
That makes sense.
you
Honestly.
really do that. But Paul Tudor Jones, he's like a famous hedge fund titan. He just bought Bitcoin, so that was in the news a lot, and he's just saying that like with so much money being into the system, we're going to go into a deflationary period, and that like Bitcoin is the only thing that like has stable, asset prices. It's gonna like it's capped. The Fed is printing so much money, and some consequences have to come from that. Well, Bitcoin, there's only 21 million Bitcoins ever going to be made, so it's a stable asset for cash. Even though at the same time, I don't have enough cash to. I feel like as an investor, I have to think about the risk to reward. Like, I don't have enough cash to put 1 or 2% of my portfolio in Bitcoin like I would like, because I don't see it. So like the closest thing to that would just be Visa or MasterCard for me, or Square for sure. If you want to play that, I think that's a way to play Bitcoin and be less risky. It's Square, because they're doing the fractional investing on Cash App, and they're actually putting like you can buy Bitcoin and stuff on Square, and they're kind of laying the framework for it to be more readily accessible. So if Bitcoin goes up and stands to benefit, so is Square. And I think it's just a stock that has major potential upside. It's like I believe it's only like it's in the 80s. So
cool.
I actually want to touch on some of the companies, Jay, you have on your list in the chat. There's 3 in particular that, well, 2 I really like, and the third one I kind of like, but I just don't know that much about it. It's the business model that really gets me. Paycom, ServiceNow, and Salesforce.
Mm-hmm.
Particularly Paycom and Salesforce are 2 of like my favorite stocks, especially Salesforce. Salesforce is up there for me. And for those who don't know about those 3 companies in particular, and I think what's another one that's in there? I think CrowdStrike might count too, but it's like the software as a service business model is like, to me, and I'm going to talk about business models and all that next week, but hands down is like my favorite business model of all time. Especially if you can get like businesses or enterprises to like buy in and be constant buyers, which is why they have like amazing cash flow generation, amazing margins, and it's like their growth just seems like it can go on forever.
Yeah, I think Salesforce, if you look at their revenue and earnings, they didn't miss for like a straight 13 quarters in a row. And it was just, I remember I traded the earnings one time and made a boatload of money on Salesforce. So I love that business model as well. Like, I feel I'm looking, that's why I say software is the lead, like it's recurring revenue. So like anything Salesforce provides, like the customer service for businesses, and then Paycom is another customer service part of business, but on the HR side and on the payments, payment processing and everything like that. And then one more, ServiceNow like builds systems on top of systems for business to implement, get in the cloud and everything like that. So I think all of them. I'm more of a. I know you like to break down business models, look at everything from a fundamental way. I just see the companies, I see their charts, and I just craft ideas and say, what could this do? And it's actually worked for me. I'm still learning, every part of a balance sheet and everything. So I think that I'm actually really interested for you to break that down. Besides just like, how to value a business without the chart. I'm actually interested in that for sure.
Cool, man. That's what's up. Go ahead.
Another one that I find very interesting, I just put on the list, is Fiverr. They're I don't know if y'all familiar with them. They're
Yeah.
You can like get your homework done on there. You can get a logo design. They're like a gig e-commerce site, a hub, and I think that with work from home and these new emerging trends, everyone's going to. It's like the Google for short-term trend businesses. Like if you need to, you can probably get your lawn mowed on. Find someone who has a lawn mowing business on Fiverr, or tutoring. You can get tutoring online on Fiverr and it's not expensive. Everything runs from $5 to like $100. And when you look at the stock price and the potential of where it has to go price wise, I think it's easily $100 stock, and by 2021, so that's another $50 of upside. Also, I just want everybody to think about trends and where you think things are going or what's going to continue. Even though like you might say Shopify is overpriced on a price to earnings ratio metric, e-commerce is really just starting. Walmart and everyone else is just now getting to the point to where they're really hammering home on the e-commerce and trying to catch up to Amazon, Walmart, and Target anyway. So I see that, and work from home is just making people get more side hustles, and you have to have a website or an e-commerce store as a small business owner. So I think Shopify is going to continue to grow. I think that on the food side, consumption side, Beyond Meat's going to do very well if we keep having meat shortages due to coronavirus, or just in general, the ability for the yearning for people to eat alternatives to meat, just maybe once or twice a week, is going to increase drastically. And they're the only ones on the public market right now doing that, besides, maybe a Kellogg's or a Tyson Food. But like, if you look at their revenue increases, I think the stock is a $300 stock in the future. That's kind of how I like. Teladoc is also my favorite. One of my favorites. It's going to people are going to stop going to the doctor as much, especially if you can just FaceTime a doctor, get what you need done in 15 minutes. You don't have to drive. You can save on gas. You're worried about being exposed to internal illnesses, from the hospital or a place not being clean. Or if we see another surge in cases, hospitals might be spread thin. So the only place people can, get their prescriptions filled and all that is by, teledoctoring. And, we have a growing population of younger people or millennials, while aging population. So this whole new generation is going to change the way we, see medicine.
No, I definitely agree with you on Teladoc, for sure. And that is actually a great way of thinking about things. I actually, like, in fundamental analysis, view things closer to you, Jay, in that I don't necessarily care as much about what the company is worth today from traditional measures. It's more so how much do I think they're going to be worth in the next 3 to 5 years. I mean, that's kind of how I view things. So no, I agree with you on that. I also wanted to touch on, so Brandon posted in the chat, I told him that I was going to help him start investing and going like the ETF route. Just a reminder of what ETFs are. they're like it's like a stock within a stock. So it's like multiple stocks are all in one. So it's like holding 50 or 100 stocks, but you just have to buy one stock. It's confusing, but essentially you're buying a stock that holds a whole bunch of other stocks, right? There's this one firm that's out there that I've met with before called ARK Invest. And ARK Invest is really into innovation, right? Innovation is something they really put a lot of time in. They have like their own podcast that talks about innovative companies or what they see big trends are happening. And they have actually a ETF. The ticker is ARKK, and that has all their like best ideas, right? So in there is Square's in there. Tesla's the biggest holding. There's also Zillow Group's in there, Roku's in there, and there's another name called Illumina that's in there. That's actually really interesting. And Illumina is in the like genome sequencing research space, which is kind of a new hot field in the medical field for research and figuring out different cures. So if you want to get started and you're not sure which stocks actually pick, but you just want to grab a good collection of innovative companies, ARKK may be the way to go.
I think following up on that with I think they have a company there called CRISPR Therapeutics. I think that one's really cool with the genomic sequencing. It's worth a look. The only thing is like there are so many stocks sometimes that I like to. You almost have to pick like 5, 10, max 30, and just forget about the rest, and just buy an index fund because there's always going to be the next big thing. So it's hard to hold so much. Like I'm not willing to risk my portfolio on CRISPR Therapeutics. I think I think it could be big and they could that might be like a flyer that I have for a healthcare name. I think that Teladoc is a much easier business model for me to understand than making money, and how CRISPR Therapeutics might be changing the world, but so is Teladoc, but it's less risky in my opinion. Teladoc would like something like a tried and true United Healthcare.
No, I mean, no, that's definitely a fair point. I was trying to provide a way if you don't know which, there's so many options out there, you don't know which one to pick. And especially the affordability of some of these ETFs. I agree with you that it's a good place to start, but after a while, once you get comfortable buying individual stocks, you're much better going that route, especially once you actually start knowing what you're looking for. I do agree with you on that. It's just if you want exposure to some of these companies, like how much is Tesla right now? Tesla's like around $800, right?
Yep.
Like I heard from the background, somebody told me it's 818. So yeah, I mean that last time I checked, Illumina was like approaching $300. So yeah, I mean and if you want the exposure to, like, if you don't have that kind of cash, but you want some of that exposure, the ETF costs like $63 right now. So.
We got 1 minute and 45 seconds left, fellas.
Wow.
That's perfect. So I'm gonna. Hey, EJ, I had a question. Even though this is something I started. How do you feel about leverage ETFs?
Ooh wee, man! I was just doing research on that this weekend. All right.
I love. Look it up when you have a chance. TQQ and XPXL. So it's basically 3 times leverage S&P 500 and 3 times leverage NASDAQ 100 ETF, and the returns are like when the NASDAQ is up 2%, I'm up 8% on that.
Yeah, no, it's pretty bonkers. No, you're definitely right. It's pretty bonkers. There's a way you can manage it. I was actually looking into it for swing trading. So it's funny you brought that up. So literally, that's the way
I think we can talk about it next week. But yeah, like it's something I actually have those in my IRA just sitting. Like that's like my exposure to tech instead of just picking like ARK Invest. I just have TQQ, XPXL, and XOXL. So XOXL is